Welcome to Epoch Trades, where we trade the new age. Today we're going to be covering key levels on the higher time frames for the monthly and weekly on Enjin coin. So, as always, our key level criteria is a swing high, swing lows, multiple rejections, acted as support and resistance, drastic moves away, obvious to spot, and recently formed. So, let's go ahead and jump right in. The most obvious levels that we can plot on our chart is our swing high here, and make sure to color coordinate it so we know this level came from the monthly chart. And we see a swing low over here, which we've seen multiple rejections from all of these wicks here, and we've seen wicks reacting to the level here. So let's go ahead and hop into the weekly. Now on the weekly chart, what do we see? Well, we can see a level right around here where price reacted multiple times. So let's draw in a zone. Now, how big do we want this zone? Well, this is about a 17% range. So what we're actually going to do is lower our zone just to the top of the wicks. As we can see, price broke through and reacted to this level, holding it as support. Once price broke through and came back to this level, we can see it acted as resistance. And as price came up, we see more reactions to the same level, acting as support, and then flipped once again to resistance. So we have multiple reactions, support and resistance, and this level is very obvious to spot. As we can see from this resistance level here, all across the board we can notice all of our reactions. So what else can we find? Well, we can find our weekly swing high from these candle closes right here. And we also notice a long wick reacting to the same key level. We also notice a level here, which we can draw in a zone. As the candle closes are very similar, they're very close together, so we can mark this level. Price got rejected from here, and we see a reaction, a fake out, and initially rejected from the same key level as over here. So the resistance level was established here, and it was respected again here. So we have multiple reactions to the key level. Let's go ahead and hop into our most recent price action, which we can notice a swing high here, and we almost notice a bit of a reaction below the level from these long wicks, but not too much in most recent price action. This is a recent key level, so as price comes back up to this key level, we can expect a reaction at the same level. Now, we also notice a low right here, which let's make sure our line is all the way across the board. And we do notice price reacted to this level as resistance in the past. So now we see the same key level, price is establishing it as support, as we see a reversal here drastically. And as price comes down, we do see a long wick reacting to the same key level. So as price comes back up, if price comes back up, we can expect to see a reaction from this level here established from the swing high. Now, let's reset our chart. Looking at this chart, we can identify where price can react to as price returns back up. If we didn't plot these charts or didn't plot these lines, we would have no idea where price may react, and we would be trading blind. but since we plotted all of our key levels, we have an idea on where price will react and reverse. So, that's all our key levels plotted on the chart. I hope you enjoyed the video, and if you got some value out of it, go ahead and hit that like button and subscribe for daily videos like this.